The S&P 500 index, heck, the whole stock market in recent days has experienced a massive crash, over 20% down in the S&P 500. So we're well into bear market territory. That, of course, you do know. But what you do not know maybe is how long that correction might last. So that's why I'm gonna tell you exactly, based on historical data, how long this bear market, this correction is gonna last. And secondly, we're gonna take a close and very deep look into the stuff that makes the economy go round. Oil. So, super interesting video, lots of free value for you. Stay tuned, we're jumping right in. Hello and welcome to another video by HKCM Global. My name is Joe, and as just mentioned, today we're gonna dive into two deeply interesting topics. First of all, how long is this bear market that has just started gonna last? Maybe, potentially. And secondly, what is oil doing? Oil is the biggest indicator for world economy, so we're gonna take a deep look into, of course, crude oil itself, for example, WTI, and then I'm gonna show you United States Oil Fund and also a super interesting company focusing in oil out of China. And as you maybe know, I'm midterm, not so sure in the short term, but midterm, super bullish on China. So I see huge potential there. That's why I chose this stock, and you'll see which one in just a couple of minutes. So then, the tough question that everybody eagerly wants an answer for is, how long is this bear market gonna last that just recently started after Donald Trump's mad, batshit crazy tariffs that he put on China and many companies out there? I mean, sure, of course, by now they have been paused for 90 days, but it's just a pause, right? So as of now, there's nothing yet resolved. There's no deals on the table. Still, in 90 days time, as of now, with the information that we have to expect that it's gonna all just come back and set right back into place. So meaning on a macro level, everything is just as bad as on the deepest peak of the recent sell-off in those days. But now, the interesting part, how long is that gonna last? I found this super interesting chart here by First Trust, listing of every single bull and bear market all the way back to 1942. And there's a lot of interesting data in here. So maybe let's not dive too deep into the history, but let's maybe look at this huge prolonged bull market here, all the way back starting from the late 80s into, of course, the dot-com bubble in the early 2000s. I'm gonna just pull this a little bit bigger here. So then, yes. So this huge bull market here starting from the late 80s, that was 12.3 years total. That's wild. Close to 600% total gains with an average annual gain of 16.9%. That really is solid gains. Then followed by this prolonged correction of 1.5 years bear market. We had a short bull market here. I would neglect that one. Another huge sell-off to follow, so that was probably just the triple down effect. Then followed by another bull market, 100% of gains here, 15% daily average, yearly average. Sorry, obviously you're not stupid, you have figured that out. And then the great financial crisis, which some of you might remember, I do. Which, by the way, in all of this S&P 500 history has been the deepest correction so far. Can you imagine? From all the way from 1942, this great financial crisis back in 2008 has been the deepest correction with 51.9% peak correction, lasting only 1.1 years. That comes down to an average annual loss of 48%. That's so basically you lost half of your money in just that 1 year. That's absolutely wild. So then another big bull market followed all the way up until the COVID crash, 400%, 15.8. Then another post-pandemic relief bull market followed, this one here with, I believe, the largest annual average gains of 53.5% average annual gains. That just brings it to perspective in how wild of times we're currently living. That's just 53.5 average annual returns. That's just mad. That's just mad. So then, of course, 2022, another correction followed, closely related to the Russian invasion to Ukraine. And now we're currently in this bull market lasting 2.2 years. Well, maybe right now we're not anymore, but at time of this chart, we have been in this bull market, and now this new bear market is unfolding. So the big question, of course, how long is it gonna last? And to maybe answer this chart here by First Trust brings in the historical perspective, telling us that the bull market on average lasted about 4.3 years with an average accumulative returns of 150%. The average bear market, however, lasted only 11.9 3.1 months, so not even a year, with an average accumulative drawdown of 31.7%. So of course, by now we're only a couple of days in, but if we take that average drawdown of 31.7% by face value, we could be almost out of the woods, because S&P, as we just spoke about, 20-25% drawdown. And if you, for example, already have been subscribed to our daily market analysis service, you would have gotten a lot of push notifications, a lot of entry notifications to seize that opportunity to get into the market, and you would already have racked up quite nice profits in the last couple of days. And I don't want to fool you. It would be completely foolish of myself to tell you right now that we are finished with the bear market only because we have already seen 25% down in the S&P. That would be just pure fortune telling, and I'm not going to do that. Just want to give you a perspective here that with an average of 31.7% drawdown, we almost made it, right? We're almost there. We almost hit perfect price targets. So just on a historical average, we could already be done with that bear market. I don't believe it, however, but we could. So then, what is oil doing? Oil is one of the biggest indicators for the health and wealth of the global economy. If a recession is coming in, always oil prices fall because global energy demand goes down. And so oil prices always are an indicator for the health of the economy. Not a leading indicator, not so much a lacking indicator, pretty much a one-by-one tracking indicator. Mostly. And so we're jumping right in, starting off with WTI, one of the two biggest oil brands out there, usually mostly sourced from the Permian Basin in Texas and also the Gulf of America. And so with WTI, we have ever since our short target zone here back in August of 2024, we've been in a prolonged sell-off. Well, a bit of sideways action, but overall a sell-off. And ever since we've been in a WXY correction still to unfold. So we see from current levels, we expect probably a few dollars for the price still to run. So maybe even up to $10 here to finish off this overreaching B wave. And by the point we finish off this B wave here, we could see another sell-off by 30%. So our target zone here for this huge overreaching wave 2, which really would be buy-in opportunities that will not come again for quite some time. And so that's why currently I would be cautious to get into the market right now, because overall we still see huge downward potential, even though it might look as tensions are already lifting. And we just discussed the average bear market lasts 11 months. So that would perfectly go along with the oil market crashing down way further. But then the good news is this overreaching wave 2 low that you can see here, that becomes even more apparent if we go over to the overreaching time frame of 1 week candles. This overreaching wave 2 here follows a wave 1 that has been established during the Russian invasion to Ukraine in March of 2022. And so that means ever since all this sell-off, starting from $130 per barrel, all this sell-off will be made up for by this huge wave 3 to unfold. So in Elliott Wave Theory, after a wave 1 upwards, always follows a corrective wave 2, which then is followed by another bullish wave 3, which in many cases is the strongest wave of all of them. And so we could, if we just start off from the upper middle of our target zone here up until this wave 3 target, that's almost 400% from here onwards. So huge price increases to follow, which honestly, for me as a car guy, that's bad news. That's bad news, but we will see. I can only tell you what the charts are telling us and communicate it to you in a probably somewhat understandable way. But for car people, that's really not good news. But for you as an investor, good news. Or also, of course, if you are a car guy, you can hedge yourself by just going along the oil market. And another brand of oil that we analyze also on a daily basis, by the way, if you want to collect those daily analyses that we provide on over 200 markets, you can go down to the description. There is a link taking you to our website where you can sign up for a daily market analysis service, and you will get push notifications, you will get target zones, you will get entries into our model portfolio, everything, all based on our winning Elliott Wave Theory analysis. So if I were you and I have money invested into the markets, I wouldn't miss that. But back to the analysis here. Brent, also a brand of crude oil, usually tracks WTI pretty much one by one, only the price levels are a little bit different. So for Brent here, we see the target zone for this overreaching wave 2, somewhere between the area of $30 roughly to $42. So likewise from the wave B top that we're expecting somewhere in that area, another 38 maybe 40% even drawdown. So same story. I wouldn't necessarily go into the market right now. I would definitely hold still. Overreaching time frame here for Brent. Same story. Wave 1 we have established by the time that Russia invaded Ukraine. Huge shock to the markets. And now we are in the overreaching wave 2 correction, and from here to unfold a wave 3, a wave 4 again downwards, and a overreaching wave 5. But that is years ahead. And that's also precisely where it gets a little bit tricky, because going into commodity markets like the oil market, for example, and staying in there for years can rack up quite a bit of costs, because usually those CFDs that you would usually trade commodities with, they come with some rollover fees, they come with some holding fees or even funding fees. And so if you want to go into the market for years on end, that can become expensive. So that's why we'll also look at USO, the United States Oil Fund, another financial vehicle in the oil markets that we analyze on a daily basis, and where you can definitely go in for a longer time than directly in CFDs. And also here on this USO chart, we have collected quite a few wins over the last couple of months. So for example, here in this corrective sideways movement, we have established a short target zone back in August of 2024, which was successfully hit. But what I hit, come on, that's just a tiny peak inside and then a huge sell-off to follow. So that was, yep, yeah, well, 15-16% downward. And then from our next target zone, which finished off this sideways movement with an overreaching X wave, we have, starting just from the lower end, not even from the optimum price target, starting off from the lower end, in the peak we have already seen 25% sell-off. So that would have been a perfect opportunity to profit even from falling prices in the oil markets. And from here onward, likewise, as with the oil price, we see still the correction to follow through with an A, B, C wave, finishing the overreaching wave Y, and then also establishing a big overreaching wave 2. And after a wave 2 follows, of course, you know it, a wave 3 upwards again. And so that's why in the overreaching time frame here as well, we have concluded the wave 1 top all the way back in, yes, you guessed it, in March of 2022, Russia invading Ukraine. And ever since, we are in the process of finishing up this following wave 2 downwards corrective move. And from here onward, we see then the prices again to climb. In this case, however, different from the oil markets, we do have an alternative scenario estimated here at 30% probability. So I would probably disregard it. 30% probability is rather low. But in this alternative scenario, we have this wave 1 top here counted as an alternative B wave. And so that means that in this case, an alternative C wave would follow. But me personally, I would stick with our primary scenario, way higher probability for this to unfold. And it also matches up with the expectation in the oil market. So there's confluence there, always a good sign. So then, now my personal favorite of today's video. Just recently, the other day, I posted also an article on both our Instagram and X page about PetroChina. You can actually look that one up here directly. Also in the description, there's linked our X page and our Instagram page. Huge of additional free value there. Interesting short snippet articles, but also reels out of our analysis. So I'd highly recommend you check that one out. But straight to the chase, PetroChina, hugely interesting because me personally, I am two things. I am a fan of diversification, and secondly, I'm a huge midterm believer in China. In the short term, with all this trade war going on, sure, there might be some downside still, but in the mid to long term, I'm a huge believer in China. They, on a fundamental basis, they've just been rocking it over the last couple of years. The demographics, they are in a bad spot, but then again, they're not alone with that. So that's some concern to me, but technically, on fundamental level, I'm a huge believer in China. So that's why we're gonna look at PetroChina as well. Huge oil refining and exploration company out of China. To just give you a rough ballpark there, almost on pair with example Chevron. Chevron, obviously you do know, if you are interested in the oil market, you know about Chevron, huge American company, probably together with ExxonMobil, the two most popular and prominent ones out of the American realm. PetroChina is pretty much the equivalent out of China, and with an ever more growing Chinese economy, PetroChina to me is definitely a hugely interesting addition to American oil companies. And so here in the short to midterm on our 4-hour chart, so every single candle here presenting 4 hours of the trading day, we see that we have concluded an overreaching X wave, and ever since that X wave topped over in July of 2024. We have seen the course so far in an A, B, C correction leading into an overreaching W, X correction so far, and now we're about to print the Y, so the final wave down move, to then complete the overreaching wave Y, completing the overreaching huge wave 2. And if you have paid attention so far, overreaching wave 2 bottom definitely rings a bell. Again, we have confluence with the spot commodity markets in both WTI and in Brent. And again, we have confluence with the USO, the huge American oil fund that we just discussed a couple of seconds ago. And that means, likewise, in the long term, that after this huge overreaching wave 1 top that we have seen all the way back in 2007, we have ever since been working on this correction in an A, B, C, leading into a W, leading into an X, and now being finalized in a wave Y. Ever since we have worked on this wave 2 to finally bottom out. And we do believe that it is about to bottom out here in this truncation in the area of roughly 4 Hong Kong dollars from here onward. I mean, you can probably already see it for yourself, but from here onward, huge upwards potential. So in the first step in this first wave 3 to unfold, which of course then will be followed by another wave 4 correction and another wave 5 to complete the overall cycle. But in this first wave 3 move, we will definitely go over, of course, the wave 1 top. That's the minimum target that we have to achieve. So at least 400% from here onwards, but more likely to be at least 500, 600, 700% maybe. So that's why I'm hugely bullish on this title. I will be watching it closely and will waiting for a target zone to be placed here. We do not have one yet, but probably I estimate that in the next couple of days, maybe weeks, we will put the target zone in here to get into the market. And if you do not want to miss that entry, of course, I will be making videos with free value for you in the upcoming months and weeks, but we have lots of markets to cover. So I cannot guarantee you that I'll be making a video in time for the target zone to being reached. So if you don't want to miss that, again, sorry for all the ads, but there down in the description, there's a link taking you to our website where you can subscribe to whatever market you like. There's 200 markets to choose from. And if you subscribe to that market, you will get daily updates. You will get updates on every single move, on every single opportunity that is coming up. And also you will get updates on every single entry that we take with our model portfolio in said market. So if that isn't of tremendous value for an investor like you are, I don't know what is. That's why I'd highly advise you to check that one out. And up until then, see you in the next one. Take care.